All right, Bulls and Bears, back with another dose. Appreciate you being here. We got a ton of news to get into today. So much happening economically across the world, but specifically here in the U.S. We will expand it out, though, because we've got retaliatory tariffs levied against the U.S. that are happening with some major countries. So we're going to see the impacts here in the U.S. in the very near future. We're going to talk about the possibility of a huge wealth shift, and we're going to see the poor and a lot of the middle class people possibly getting a lot poorer, and they're going to be suffering under much worse conditions here. And that's not me saying that. Take a look at some of the news today, and I think you'll agree what the direction is going to be headed in. But it could mean the billionaires are going to get a lot wealthier as well. So you've really got to be on your toes as far as investing, stay ahead of the economic curve. Make sure you are subscribed to this channel. Let's go ahead and get started right here. And first of all, it looks like some poorer people, or the lower income portion of the population that rely on food banks, are going to get a big thorn in their side with this. Federal funding cuts impact food banks in Illinois and also farmers. Also happening, I know it's pronounced Illinois, also happening in Michigan. Food banks fear uncertainty amid cuts. Rising grocery prices strain local food banks. We're already seeing reports of food banks running low and even running out of food. Storehouse Food Pantry feels the impact. Folks, this is just the tip of the iceberg here. These headlines that I'm pulling up here are just ones that came out just in the past 1 to 2 days. There's literally hundreds. I can't even keep up of the number of stories about food banks facing uncertainty, facing shortages because of all the economic calamity happening right now to the lower income people. Also, if you rely on Social Security, you just got some bad news. Take a look at this. The COLA, cost of living increase for Social Security, is likely going to be at 2.3%. Now, that's based on the initial CPI data from a nonpartisan senior citizens league that's estimating that to be 2.3%. But guess what? That's lower than the current rate of inflation, right? So that's bad news, folks, when the Social Security increase is not even keeping up with inflation. And also, many seniors were disappointed with the 2025 increase, which was 2.5%. Again, barely scraping the tip of the inflation iceberg, so to speak, or not keeping up with inflation. And if you look at real inflation, because the official number's way too low on the estimate for how much it costs just to get by nowadays, I think a lot of people that are already poor or skating on the line between being poor and maybe middle class are going to have a lot harder time, especially if you're on Social Security. And I found this information today out of USA Today. What they're saying here is 23% of retirees said that Social Security is their only source of major income. Of course, they may return cans and bottles for $10, $20 here, but as far as major income, about 1 in 4 retirees are saying that Social Security is their only source of income. So maybe I'm wrong, but it looks like the poor and the middle class, with these cuts from the food banks, the cuts from Social Security, or the Social Security benefits not keeping up with inflation, it's going to cause a lot of pain. And I think the homelessness problem's not just going to continue to get worse, but the pace of it getting worse is about ready to speed up here. I think we're going to see a big uptick in homelessness. Take a look at this. And here's how they put it over at the AP. The current administration throws hundreds of affordable housing projects into limbo after contract cuts, folks. So this spending cut, or the cutting of the spending, is going to be impacting a lot of affordability programs, food, housing, and the list goes on, folks. And if you're in a lower income situation right now, you might want to really look at, if you're not already investing, maybe looking at a second job, maybe a third job if you're already working it, because it's going to get a lot harder as far as we can see. And inflation, there's a lot of risks out there. We have retaliatory tariffs now being implemented from many other countries right now. Take a look at this. And we'll show you another AP article right here. The trade war draws swift retaliation with new tariffs from Mexico, Canada, and China. And we have the current administration out there saying that tariffs on Mexico and Canada could even go up and they're declining to rule out that this could possibly lead to a recession. Now, the R word there, the recession word, it's not, to me, it's not scary. To me, that is the solution, right? That is the solution. The question is, what will be the response to the recession? Will it be inflationary with a whole bunch of stimulus checks being sent out and other things making the price levels go even higher than what they are currently? Well, speaking of high price levels, let's jump over to automobiles real quick. We would expect that with automobile loan defaults at multi-decade highs, you would start to see car prices coming down and a bunch of repossessions. Instead, the opposite is happening, folks. We're going to talk about the numbers and tell you what's behind it here. And we'll start with this headline right here. Late car payments, the highest level in decades. The highest level since Fitch Ratings began tracking data in 1994. So I'm not making this up, folks. This is real data. But look what's happening. You would think car prices would be plunging. But if you thought that, you would be wrong. Prices have actually started going back up in the past few months. Let me bring up a chart. And we're looking at the Manheim Used Vehicle Index. You see the price started coming down over the past few years. But over the past, looks like about 5-6 months, they've actually been going up. And if you look at where I'm at right now, if you're watching this, if you look at my cursor to the right of the screen here, compare that to pre-2020, we're still way above the vehicle prices that we saw prior to 2020. And now, instead of coming down, they've been going back up over the past few months, even with multi-decade highs and late payments on car loans. Right now, we've got a couple different camps as far as the opinion on what's going to be happening or where we're headed with car costs and inflation in general and price levels in general. But just focusing on cars for a minute, we have one group that says we're yet to see the fallout because late payments are late, but it doesn't mean cars are getting repossessed yet. So a lot of people are saying that we're on the verge of a major repossession crisis, and that's going to bring car prices down because car lots are going to be flooded with new inventory, and they're going to have to sell. Even auctions are going to have to sell these cars. But here's the thing. The auctions, where these cars go usually when they're repossessed, the auctions are usually mostly, I would say the majority of the cars sold at auctions are dealers. So will dealers start cutting prices because they're getting more cheaper cars in? That is possible. Other people point to the fact that there's a lot of overflow lots now being used by car dealers because of all the vacant commercial property. They're using a lot of these lots as overflow lots. And they argue that they're not going to cut car prices because they can just have all this extra space to store these extra cars. And the second part of that opinion that prices are not going to come down is that banks are still going to keep loaning out money and that monetary policy is very loose right now. Even though interest rates are up a bit, banks are still giving out loans even to subprime borrowers. Even with multi-decade highs in late payments, banks are still giving out loans. It's still very easy to get a loan right now for cars. So I think it's going to be prices going up instead of deflation with vehicles, unless something drastic comes in and changes this entire system. This is what I see as far as how the banks are operating right now, right? And also when you look at the car dealers and what they're doing, they don't want to cut prices, folks, all right? And this is a recent chart, and this just came out recently, and it proves again that we were right. I was one saying that the car prices are not going to crash because what's happening with the banks, what's happening with the dealers. And there's the chart right there, folks. I mean, Manheim Used Vehicle Index. So those of you that continue to say that I'm wrong, that this is doom and gloom, we're right again. We've been right about housing. We've been right about inflation overall in general. We've been right about the homelessness and poverty rates, all going the exact direction that we predicted right on this channel many years now, right? So I'm not saying that this is great news. It's not great news, but you have to face reality. That's why we call it economic reality, right? So use this as motivation to try to better yourself. Look for ways to make more money, work smarter, not harder, but some people are working harder. They're working multiple jobs. Invest wisely, maybe not waste so much money, maybe invest it instead and try to make some gains to try to keep ahead of the economic situation right now, folks. And they're even talking about it over at this site called Calculated Risk. Used car prices decreased in February, but they're still up a fraction of a percent year over year. So vehicle prices not crashing, folks, exactly what we said was going to happen right here in this channel. And we've got a massive number of cuts that are going to be continuing here to the workforce here. We've got NOAA set to cut 20% of staff. Mass layoffs at the Veterans Affairs to begin as early as June. U.S. Weather Agency plans to fire 1,000 in second round of cuts. Let's see, we've got many top-ranking agencies from 2024's Best Places to Work now facing layoffs. We have other companies now. A tech giant moved from Silicon Valley to Texas, laying off 2,500. So a lot of cost cutting and letting staff go and trying to reduce their spending, basically trying to reduce their overhead. And also what's been happening with consumers getting so loaded up on debt now and starting to become more aware of what they're spending their money on and cutting back on a lot of spending. China now has seen below zero inflation. And what they're saying here is that's reflecting waning demand. So are more people just scraping by, just paying the utility bills and paying what they have to pay versus buying more things that are imported from China? Well, that looks to be the case that I think most of you would even agree with on that. Now, there's people out there that said, well, the tariffs are going to bring a lot of jobs back to the U.S. Maybe it will, maybe it won't. That's yet to be seen. But look what's happening right now with some of the moves that other countries are making regarding these tariffs. We got Lenovo out there, major electronics computer manufacturer. They're joining the China exodus. So they're moving out of China. Are they coming to the U.S.? No, they're just going to find another country where it's cheaper to manufacture goods. And to flee the UF tariffs is the way they're putting it. They're moving production to India. So just because you put a tariff on a country doesn't mean they're going to come running back to the U.S. And I'm not sure if the current administration realizes this. There's lots of other countries that have lower cost of living, therefore they can pay lower wages, right? And maybe they'll put tariffs on India next. We'll see if the tariffs are expanded. And then if they do expand it, are they going to expand it to all the countries where cheap labor exists? Because if they do, that's going to be a whole nother situation that I don't think we've ever seen here in forever. And it continues here that Lenovo is just one of the companies. There's a growing number of companies that are setting up shop elsewhere to escape the U.S.-China trade war. And India is just one of the countries. Right, and some other announcements here with similar situations. AS Rock announced in February they're going to be moving manufacturing operations to Vietnam and Taiwan. HP, another major computer manufacturer, similar announcement just a few days ago. 90% of the products bound for the U.S. will be made outside of the East Asia country by October. So they haven't said which country they're going to yet. Even Dell said they're diversifying its supply chain, meaning it's going to reduce its reliance on Chinese factories to make its product. And folks, we got another retailer out there sounding the alarm on big problems for customers. That's the Wal-Mart CEO sounding the alarm on inflation here. It's saying a growing issue is getting noticeable is what they're saying. And that news comes on the tail of articles like this where it says Walmart customers are outraged over popular product price increases, right? So even Walmart is not immune to price increases. I've seen a lot higher prices even at Walmart. I mean, even eggs over there at $8. I'm finding eggs cheaper at some other places, like even health food stores are cheaper than Walmart for some of the products that I've been shopping for lately. It's pretty interesting. And I go to a store called Grocery Outlet, which is kind of a discount grocer here in many other states. And I'm finding a lot of their items are cheaper than what you would think would be the cheapest. You would think with Walmart's economic footprint being the biggest or near the biggest employer in the U.S., you would think they could afford to have the lowest prices. But in this case, that's not true with many items and products I've been buying lately. I mean, please let me know if you think I'm right about that. But that's what I've been noticing. And folks, this all goes back. We have to bring it back to basics. This all goes back to the system of money right now. Ever since we came off the gold standard in the early 70s, we see inflation jump up and really rise rapidly, as well as the cost of everything, price levels, but also the economy looks like it's growing when that happens because more people spend money. It's easier to get a loan. It's easier to go out and spend money you don't have. So we're going to look at the GDP, which is basically the gauge of economic growth. Look at this chart first. Look, up until the 70s, GDP growth was very, very small. It was minimal. Ever since then, look at that. But see, this is what they use to say that the economy is growing. So the more debt that's put out there, the more spending, as debts and deficits rise, it makes it look like the economy is also rising along with it or growing. And then if you look at this chart here, it looks very similar. This is the consumer price index. This is inflation. Looks very similar, doesn't it? Up until the 70s, it was very subdued. It was minimal. Then after the 70s, cost of living, folks, consumer price index skyrocketing. So let's go back and forth again. Look at the similarities. GDP, which is basically what they're calling economic growth, and back to the CPI, consumer price index. Very similar charts, right? So connect the dots, folks. This is all about the money creation. And do you think they're going to stop the money being thrown at the problem, or are they going to increase it? Right? So it's very important now to stay on top of all this, folks. I think it's very interesting to follow this. So I love reporting the news for you guys. Thanks for being here. Please let me know what you think about all this. Are you going to be investing so wisely that you're not worried about this, or are you just making so much money that you're not going to be worried about this? Or are you concerned because maybe you know people that are kind of skating the edge financially? And we talked about earlier in this video, a lot of affordable housing programs are being cut, many other jobs being cut across the country. Some people are cheering this. They say this is the solution. This is going to be cutting the waste and cutting spending, unnecessary spending. And ultimately, the tariffs are going to bring jobs back, even though right now we're seeing a lot of countries just go to different countries to manufacture, not the U.S., but they're saying that ultimately it's going to get better because jobs are going to come back to the U.S., right? I kind of see both sides, both opinions, kind of in the middle on a lot of this, right? I don't know which way it's going to go, honestly. Sometimes I'll say I definitely know what's going to happen as far as certain markets and price levels. In this case, I'm kind of iffy on some of these things. I'm not sure exactly what side of the fence to be on, or maybe it's best to be on the fence until we see how this all plays out. Again, I'd like to hear from you down in the comments on all this, any of this. Please let me know. Thanks everybody for being here. As always, keep stacking. We're going to get back into some investing news next report. Possibly I've got some news I've got to compile and some strategies I think you're going to like. So please make sure you are subscribed and come back here. We'll see you next time. Keep stacking. Bye for now.